Welcome to the Global Investor Podcast, a show that focuses on helping foreign investors enter the lucrative U.S. real estate market. Host Charles Carillo combines decades of real estate investing experience with a professional background in international banking to interview experts in all areas of U.S. real estate investing. Now, here's your host, Charles Carillo.
Welcome to another episode of the Global Investors Podcast. I'm your host, Charles Carillo. Today we have Yoshi Asano. For 14 years, Yoshi has been investing in commercial real estate in the U.S. Today, as founder and managing director of BCF America Investments, he has been involved in more than $90 million worth of multifamily investments as a GP and sponsor, helping hundreds of people invest into multifamily projects. Yoshi previously was in construction, and he found that most people that were hiring him were making more money than he was owning the real estate. And he decided to get in. And from 2012, he started focusing on multifamily investing. My number here of $90 million is going to change this week. Yoshi is closing on a 236 unit asset in Phoenix, Arizona, which will push that over $100 million. Yoshi works with Japanese and U.S. investors alike, and I'll let him explain more about that, about how he is able to design a strategy for both what he calls two pools of investors, depending on what their goals are. So we'll speak to Yoshi.
We are looking for portfolio deal as well, so just try to optimistic and try to look for like bigger deals as well. So that's one of it, and try to look for the value add components, right? Definitely we want to have like some sort of cash flow deal, because if it's going to be a negative cash flow or like less than 90% occupancy, harder to get the agency debt, those are the deals that we tend to shy away. We try to make sure that we have a pretty good cash flow in place, but the huge value add also built into the unit, into the deal.
Right. So it's B2C. It's with some sort of value add component, so you can, create some value that goes into increase the whole asset's property value. What are when you're looking for specific areas? Are there specific neighborhoods that you like most when you look into an area? Like you have the whole city already. When you say I want to go into Phoenix, have you already decided what areas, what neighborhoods you like?
Buildings in a Class B neighborhood, right?
Right.
That's the scenario, but it's going to be hard to find. So what we are actually focusing on right now is more of like a gentrification area, like transforming area. It used to be like a C class neighborhood, but it's becoming a B class neighborhood type of location. We find that we can find more value add components in those neighborhoods.
Okay, awesome. Now, you work with a number of U.S. and Japanese investors, and how are most of the investors? How have they found you? Is it word of mouth? Is it from other investors and from other deals you've closed?
So this is pretty interesting. So I have a couple of business partners in Japan, and their focus is more of the marketing to the investors. So they have a pretty healthy database and a network of Japanese investors. They're looking for deals in US, but they can't find the deals. They don't have deal flows. They don't know the markets. They don't have the deal flows. They don't have a relationship with the brokers, all that. So that's where I come in. I provide the deal flows, asset management, stuff like that. So I think it works out pretty well. Partnering up with the guys that focusing on more for capital or the equity side, and I'll be more like deal flow side.
Okay. And when they come in, when you're dealing with Japanese investors, what do you usually find as their main goals? Do they have it? Is it just, obviously it's very tight. It's very difficult to make any kind of return in Japan on multifamily. So is it return and some preservation as well? Or is it mainly preservation, or is it just a mix of everything?
Yeah, it's going to be a mix of everything. Depends on the type of clients or the investors. So I have a direct relationship with the more like ultra high net worth investors in Japan. Mm-hmm. These investors are looking for more of the preservation, right? So they want to have like a class A deals in urban core, like best location, best asset, and the return. They don't care about the capex too much. as long as there's a cap. I mean, not capex. I'm sorry,
Rate.
Cap rates too much. As long as there's some cap rates, like 3-4%, that's okay for them. As long as they have some sort of cash flow and they're looking into hold it for like 10 plus years. So it's more like an asset preservation for them. So they also like New York City, in LA, but now they're like Dallas, because that's one of the good markets for the multifamily investments. And there's another pool of the investors looking for more of returns, right? More of like what I do actually here as a GP for the syndication deals. They're looking for like Class B deals. They look for some sort of the cash flow, but they are also looking for depreciation. That's part of the play for them. It's kind of like a bonus depreciation here that happening last 2 years. Japan has the tax law that allows investor to depreciate in 4 years. If it's a wood structure and if it's the 22 years or older. So Class B deals become it's a perfect fit for them because most of the Class B multifamily is wood structures. 99% of the time it's a wood structure. And Class B deals built in 90s and 80s are 22 years old or older. So it's going to be a best fit for them. So those are deals that they like for depreciation play. So I have two different type of investors.
So with that, that's just for your Japanese investors. They can do that for 22 years plus, and they can. I mean, usually it's 28 years, right? They can do the depreciation for U.S. investors, but for Japanese, they can do it in 4. How are they set up for that? Do they have a U.S.? Are they able to come in here? They set up a U.S. LLC, and they're still able, or do they have to invest directly with their name being a Japanese citizen?
So for the depreciation, it's kind of like a 1031 exchange here. You have to have your own name, and that way you can have the tax advantage, right? So same thing for this depreciation play. So if they invest as a joint venture or syndication, they can't depreciate. So they have to own under their name. So typically they come in and 100% owner of the assets, and they're going to use their own entity they already have in Japan, so that they can write off through that entity.
Okay. All right. That's very interesting. I've never heard of that before. That's great. So when you have the larger, higher net worth investors, when they're looking at Class A properties, they're not really working through your firm then, is that correct? They're going through a different syndicator, or do you also have some Class A that you've worked with previously?
Yeah. So, I also have a license, real estate license. So I help them find a deal as a buyer broker, and actually I take on as an asset manager. So I do pretty much same work as a sponsor, just based on fee instead of equity position of the deal. So that's what I do for those investors. So either way, I'll pretty much create a same type of cash flow for my business. And I provide a lot of value to the Japanese investors because without the service, they can't get the deal here in the U.S.
Yeah. When you set them up, or when do you guys withhold their taxes for them, doing the withholding taxes, or is that you pass it off to a CPA to handle all of that?
Well, we're gonna have a CPA handle all that.
Right.
So typically they're gonna register doing business in Texas when they budget. But so foreign entity can register in the state of Texas, so that they know that they are doing the business here, and they file the tax, tax here in the U.S. And Japan and the U.S. have a tax alliance actually between two countries. So whatever they pay tax here, that's deductible in Japan. So they don't double dip. You know what I mean? Yeah. So.
Nice. Yeah, to have the tax lines, I imagine, with doing the LLC. Now, when you have two pools of investors, just to circle back to that, just to clarify. So you have U.S. investors as well that are probably a little bit more aggressive than some of your Japanese investors. Now, do you have another one as well where Japanese investors that are with properties that are 22 years or older? Is that how it is? Is much of DFW built in the 80s, so that's not really an issue at all. And most of them all fill into that 22 years plus.
Yeah. All the Japanese investors are, feeling. A lot of Japanese investors are feeling like 22 years plus kind of deals. And for the U.S. investor, you're asking my U.S. investors
right.
as well.
Yeah.
Yeah. So U.S. investors, they don't care about the 22 years old or anything like that, right? So just probably like looking for the deals that give you right returns, right? Yeah. So my goal is to have like close to double-digit cash-on-cash returns for 3 to 5 year holding period, and try to make it 80 to 100% of the total returns to the investors over a period of the time, like 3 to 5 years holding period. That's the type of returns I'm looking for U.S. investors and for my investors in U.S. And it doesn't matter it's Class B or Class C. It could be 60s, it could be 70s, or it could be 80s vintage.
Right. Now, after their 4 years, do you know if that gets recaptured, their depreciation in Japan, or is that a complete?
Yeah, it will. It will recapture when they sell.
Yeah.
So they have to have a calculation into that investments, but still, they have a lot of tax advantage you can take after the recapture. And their plan is to hold it for 5 years, right? So 4 years for depreciation, and 50 year, the capital gain tax will go down in Japanese tax law. So they're going to hold it 1 additional year, and they sell in 5 years. So that they pay less capital gain and they enjoy the full depreciation over a period of time.
Yeah, that was going to be my question, because what your average, and I imagine for Japanese investors, it's at least 5 years. And then for US investors, it just depends on whatever completes the business plan. So
sure.
Okay. Well, that's awesome. That's very interesting. I wasn't aware of that. So, and then when they're coming in here, they're registering as a foreign entity. They use a Japanese name, a Japanese corporation, whatever it is. Come in here. I imagine, let's say a Texas LLC. They're coming in and they have that, and then they can show that to Japan, their CPA in Japan, and it's all by the book. And that's awesome.
Yeah. They usually have a CPA in Japan already.
Of course.
And what I do usually is there's a CPA here who is Japanese and who have a knowledge of the tax law in Japan as well. So that they can connect with those CPA and the two CPA talks and try to figure out the best structure to work out for both way, right? Because it depends on it's just like your tax situation or my tax situations. Depends on the deal and depends on the business plans. There's a best match in the tax plan. So.
Yeah. And one last thing is, what is the first thing a new investor, say a Japanese investor, comes to you and he's looking to invest? What are the first couple steps that you kind of guide him through before you actually start looking at deal flow?
First step would be, so it's very high level, right? Very, very high level. Because Japanese investor wanted to invest in outside of Japan. Those guys has some sort of they want to diversify, right? They don't want to have all the assets and the currency in Japan,
right? So
they want to diversify in the different countries. And if you look at the different countries, US would be probably one of the best country to invest into real estate. So I kind of have to explain and compare between like investing in UK, invest in US, invest in Thailand, we invest in Malaysia, or invest in Hong Kong. What's the difference, right? What's the currency risk? What's the real estate risk? And kind of compare and guide them that US would be the best one of the best opportunity for them. And then, talk about the cities, because they like the LA, they like San Francisco, they like New York. So talk about why Dallas, right? Or why Texas, and talk about the fundamentals and job growth and population growth and all that stuff. And then talk about the multifamily, the asset class, talk about the retails, industrial, hospitality, and the multifamily, and why multifamily. And then, talk about just the fundamental of multifamily investments. That's kind of like what I do for the kind of high level first couple step of presentation to them.
So they're looking at a number of different other international markets as well outside of their home, Malaysia, Thailand, and the UK. Those are kind of common ones that they have looked into.
Yes.
Yeah.
Southeast Asia is pretty popular, like Singapore, Malaysia, Thailand, place like that is pretty popular. It's kind of more like high risk, high return. If you do it right, it's very high returns, but it's also a high risk because there's a country risk, there's a currency risk, different risk involved into. It's not just a real estate investments. It's more like a FX, foreign exchange, and stuff like that is involved too. So
right.
Yeah.
Interesting. Yoshi, tell us how listeners can learn more about you and your company.
My company, my focus is multifamily investment, right? Syndicating the deal as a GP. So I'm looking for 1 or 2 deals in this year. Hopefully I can pick up 1 or 2 deals and try to pick up like 4 or 5 deals next year. And build the, solid syndication company, right? That's what I kind of like, I'm focusing on. And of course, I'm focusing on the markets in all the cities in Texas and some cities in like Arizona, like I mentioned, Phoenix and Central Florida and Atlanta. I try to build like point where like I have like 10,000 plus units under my company as a GP or as a syndication sponsor. And then from that point, I'm always wanting to get into the hospitality segment as well. So I try to get into the resorts development in Japan, so that I can probably create a fund either in the US or in Japan and knock down those resort developments or resort redevelopments. I can come in, buy the distressed ski resorts or some sort in Japan and renovate them, convert it into like a high-end luxury resort hotel, right? That's what the lack of in Japan. There's a lot of interest right now that they want to come to Japan for the vacations, but they can't find the luxury hotels there to stay, and that's what they're looking for. A lot of the tourists from Hong Kong and Singapore, those and in the US and Europe too. Those are the guys that are looking for like luxury hotels, but there's not enough. So that's kind of like what I want to do in like 3 to 5 years. But the next 3 years, I'm really like super focused on multifamily, try to build syndication business to like 10,000 units mark. So that's my goal. Yeah.
Awesome. And how can people learn more about your company and your
show? So best way to reach out to me is to email me, so that we can talk about your goal and my goal and see how we can work together. So just to email me at Yoshi Asano 777@gmail.com. That's my email address.
Okay. Yeah, I'll put that in the bottom of the email for everyone. And I think that we have everything here. So I really appreciate you getting on the show today. And thank you very much. Have a great rest of your day, and good luck with your close.
Oh, thank you. Nice talking to you.
Nice talking to you. Thank you.
Okay.
Bye-bye.
Thank you for listening to the Global Investor Podcast. If you like the show, be sure to subscribe on iTunes or Google Play to get new weekly episodes. For more resources and to receive our newsletter, please visit globalinvestorpodcast.com. And don't forget to join us next week for another episode.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Harborside Partners Incorporated exclusively.